Right guys, I'm going to do a weekend update here. We'll have a look through a few things for the week ahead. Starting off, this is the VIX Volatility Index. Just out of interest, in the GFC 2008, it looks like the VIX went all the way up to 96.5. Nice big spike, and I made a ton of money. If you were, particularly if you bought early in 2007, down at $10. Well, let's zoom in and have a closer look at it, where we are at the moment. I mean, this is a weekly, and you can see we've basically got a new bottom, is what we've got. We've just sort of gapped up in 2019, early 2020. Had this spike last March, and since then we've just not gone under. This is the new floor. 20 is the new floor. So it's looking pretty stable as it is at the moment. In that sense, you can see the long-term trading range. There's regular spikes up to the top. If it's in a good strong market, it'll go down to the bottom. We're not in that. Interestingly enough, as well, volatility goes down when stocks go up, and well, we've had the biggest rally in history in stocks. Just look at the Nasdaq. Volatility is still high, which does kind of tell you that people aren't particularly happy with what's going on. There's a lot of people holding VIX. However, we had a nice big green candle followed by a nice big red candle. This is only going down to, still sitting above the 200-week moving average, and it's sitting at this support level. So it's very likely that we're going to sort of stay around this level. If we go into the daily, probably give us a bit more of a better update on that one. Press the right button. Okay. So we zoom. Away. Yeah, you can see in a bit more detail here. Here's your trading range. This is your new floor. This is your previous floor. All-time lows in the VIX is 8. So we've got this kind of zone that we're trading in. It's pretty range bound. So at the moment, it's a pretty kind of a safe trade really to buy the VIX when it gets to 20. Keep a hold of it. It periodically goes up to around this 35, 36 level. Did back in September. Did a few occasions back here. And it hit bang on as well, just last week, the week before now. So it's reasonable to suggest that we're probably going to go back up again at some point. Volatility is one of those things. It doesn't necessarily trade in quite the same technical pattern as a stock would, as it's more of a hedge against crashes. However, it's pretty reasonable to say that we're probably going to have, at least maybe next week, not an awful lot happening. I'd expect to see us just sort of maybe dip a little bit lower and stay around this level. You're going to be looking at sort of towards the end of the month really before we get in the next spike, according to what we can see here. Let's jump across to gold. Let's see what gold is at the moment. Plenty of lines for us to look at. Gold isn't brilliant. So I mean, this is the daily chart, and we're now trading well underneath the 200-day moving average, which isn't strong, and we did sell off. And despite this bit of a pullback here, it looks more, although this green day on Friday is more of a pullback to retest support. So perhaps Monday we can go up to 1826. That would be your support level before pulling over and moving back down again. If we do start moving back down again, look out. It's a good signal that there's issues. And ironically, everybody bought gold back here because inflation. So I don't know. Maybe that inflation's disappeared or something because we're certainly selling off. I don't know. Everyone seems to make up their own mind when it comes to gold. It's inflation, let's buy it. And then inflation doesn't really sit in, but there is inflation and now it's selling off, but I don't know, this is different. I don't know. Inflation is kicking in, but this time gold doesn't matter, so gold's going to go down, so that's fine. But we're still getting the inflation, but the whole reason you bought gold in the first place was because it was a hedge. I don't know. It's not looking brilliant either way. I suspect if we do break this, I mean this is kind of the main zone. If we can, you can see here there's a previous peak. This sort of double tap around 1750-ish. This is going to be resistant. If you can break here, it comes open, and there's no reason why we can't, retest this sort of zone here. If we do get down to here, I will be buying gold. I can tell you that much. Let's move on to the US dollar, because I think this is the one everyone's interested with at the moment. Nice little arrow. I'll get rid of that. I don't need it at the moment. Very interesting, if you ask me. We've had this clear move up. So you've got here's your break of support. So you've got a peak, you come down, lower low, come back up, retested this, come back down, had a higher low, gone through and straight broke, up to the 100-day moving average, and had a nice big sell-off going to the close on Friday. This sell-off has actually come down to touch this support level. It would actually make good to just go straight up. However, the 50-day is still sitting a bit lower, so there's perfectly good reason for us to just sit and wait a bit longer. In fact, to be honest with you, we could even go back down to sort of this sort of level and come back up again. There's no reason why that won't be possible. I don't think it's going to happen, but you never know. Let's have a look at the DXY and more of a longer term. See if this gives us an idea of, if things really are changing direction, or if it's just setting up to head lower, as a lot of people seem to think. So 2018, we came down, similar sort of thing really. We had this. This one seems to be a bit more quicker if it does go. However, you got this similar sort of pattern with a little, bottoming consolidation triangle, and then zip straight back up. It's very likely that this is going to happen again. But if we zoom out and have a look at things on a much longer basis, we can see, despite QE and all this money printing that started after the GFC in 2008, the dollar's actually now higher than what it was since QE started, which is brilliant. And you can see in the longer term cycle, it's there's this range, and we're now gearing up to go back and test this. And if we break 104, the dollar's going up. My conservative estimate was, I think at some point we're going to retest this 120 zone, which we did back in the early 2000s. Actually spoke to Brent Johnson on Twitter, and he was saying he thinks it's going to go as high as 150, which would be crazy. You see, back in the 80s, things were even higher still. But there's definitely a bit of a trend going on here, and it looks to me like things are going back up. You can draw a nice little trend line on the US dollar here, and it's now just finding this. I mean, even if we, this would be the ideal sort of trend line in the US dollar, I think. Which, if you zoom in a bit, it's broke underneath that trend line, which you would expect with the largest net speculative short position against the US dollar. But not only that, things are actually genuinely different this time, in the sense that there's so many loan deferrals and people out of work at the moment that there just isn't that demand for dollars. So you would get this move down in the dollar, because nobody needs them. Nobody's paying bills and stuff. It's all been stopped whilst this coronavirus is in place. So when the economy picks up again and all that demand for dollars comes back, got to pay for my mortgage again, got to pay for my bills, got to put fuel in my car to get to work, or whatever it may be, making these new purchases, you are going to see more stability in the dollar anyway, and I think things will start heading a lot higher. And this itself is looking like a giant triangle pattern, which, if it does go up, is and break, a measured move would take you up to about 120. Okay, let's go through and have a look at TLT. So TLT, long term, 20 plus year I'm pretty sure they only do 30s. But bonds, so we can see here the TLT is now sitting at support. This previous high from August 2019, it's actually just above these other highs. I don't think there's been another point where it's gone anywhere near this level. No. But yeah, the long-term trend is up. The trend is your friend until it's not. And things are definitely trending higher. So we're sitting here, bang on the 100-week moving average. If we go into the daily and have a look at this in the daily, give a bit more of an insight as to where things might be going. We're definitely, you can see there's a bit of a channel here, but it looks like we're going into a critical week really for TLT. This is your support level that really would be critical to hold, and I suspect it probably will. But if we just draw ourselves a nice little trend line, you can see there's this downward channel that's been in play here, and put that line in. If things come back up and we break this trend line, which if this holds as support next week or the week after, we could very quickly see this trend line go up. You can see there's another sort of channel here. In fact, we'll just zoom in a bit further and have a better look. So the trend line that was in place back here, and once that channel broke, boom, straight up. So this is the kind of thing that we're looking at here with TLT. If this holds, this is just a giant bull flag if anything. Boom, straight up. And the initial retest is going to be up here, the previous high. Potentially even going a lot higher than that. I don't know. Up to the 200s. Let's have a look at the US stocks here. And we'll start off having a look at the weekly. Okay. Brilliant. Yeah. No problem. I don't see any problem here. It's not like there's a big bubble. Right. Let's zoom in. Get a bit more detail on this. Yeah. So we are significantly above all the 200 period moving averages. I mean, even if you're a bull, markets could come back down to this main trend. This is the long-term trend since 2008. It's this line here. Even if we just go down to 3200, that's still retesting this trend line. So arguably things would still be bullish even then. So God knows how low it's going to go if things are bearish. But yeah, it's an interesting week. So we've got this brilliant up week, but we're still not broke out of this channel. This trend is still holding. So it's not it's not clear cut. Oh, we're gonna zoom off now. Everything off to the races. It's not to say it's not going to happen. Anything can happen, but it's not. We're not sitting up here. A really strong week, as silly as it sounds, would have probably hit 4,000, and we didn't quite get that. We're back up to the top of this channel. So if we go back into onto the daily, it might give us a bit more information as to where we're going. Now remember, stocks are predominantly traded these days by momentum algorithms. And these algorithms basically just buy and buy and buy. And what we can see here is it's gone down, it's tested the 50, brought just underneath the 50-day moving average, had a bit of a think, and then boom, straight up. And now we're back up. So your first point of resistance is going to be wherever this trend line is really. So I suspect we're probably going to get up here. This is going to be your first point. If we can get up to 39.30, I'd expect to pull back, and then further continuation. Let's have a look. It's potentially an opening channel, potentially just a break under. Guess we'll find out. It's yeah. There's a few interesting things going on in the markets here, but nonetheless, I think we're probably still going to head a little bit higher before we come back down, and this is going to be a support level now. You can see it's quite a bit of support at this zone here. It's tested here, so 3800. We can go up to around 3920, come back, retest the 3800 zone as support. Then yeah, okay, arguably stocks are bullish. Whilst I'm expecting everything to crash, the only reason I'm expecting things to crash is because of a liquidity issue, which means that stocks are they're not going to look like they're going to crash. They're just going to keep on going and up and up and up and up until one day they just don't stop going up, basically. It doesn't have to be a technical indicator because it's all based on liquidity. When liquidity hits, it sells. I had the similar sort of issue here back in March where markets went back up, they had this correction. Check the 50-day moving average, kind of bang on to what's happened here. Had this crazy up move. You can see it, same channel, same sort of thing with the channel. Held, and then out of nowhere, boom. And it's kind of scary actually that it's sort of 12 months to the day, if you will. I mean, let's have a look at this. The bottom of this retest was on the 29th of January, 2nd of February. Yeah, so the weekend over. So the 2nd of February is when things started to move back up. And then back here, 39th to the 3rd. Yeah, literally to the exact day. When did the sell-off happen? 24th. 24th, the first red candle. 20. Oh, it looks like 24th was a weekend here, so it's 25th, and then it's just sold off. That, I mean, it's actually quite spooky how close this is going to be. So it'd be ironic if it goes down. 20th of February, that's your day. 21st of February. So yeah, we'll see. That would actually set up quite well. If we can go up a little bit higher, roll over, liquidity hits in, boom. Yeah. So that's certainly a possibility on the S&P. Now, this is one thing I want to have a look at, is treasuries. So you can see here quite a bit of stability back last year, then sort of out of nowhere, if you will, boom, liquidity issues, and bonds absolutely tanked. The rates went. At first, people going, oh no, rates are starting to go back up, rates are starting to go back up. Tested the 100-day moving average and just went through the floor. And they went down at one point here. You can see the number at the side. They bottomed at negative 0.12% interest. So they actually dipped negative for a period. And then since then, it's sort of settled just above the zero line. Averaging about, let's have a look, where's the average? So the average is going to be 0.1 basis points. You see just here. If we zoom in a bit more, let's get a bit more of an understanding as to what's going on. Now we can start to see a bit of the problems. If I go onto the weekly, it's probably going to be look a bit better. There we are. That doesn't look particularly good. What have we got again? This has been your trend. It's been stable, and then this last week, boom, rates are going down. And so at some point during last week, rates touched, I mean, I suspect that's going to be, 0.01%. Yeah, almost touching zero rates. If this carries on, next week rates are going negative, and if rates are going negative, that's not going to be brilliant. So yeah, we're definitely running into issues here with liquidity. It's the same story with, is it a 3 year? Yeah, 3 year as well. So the low end of the curve is going negative. Currently down to 0.3. And again, back in this crash last year, negative 0.1. So that's not looking particularly brilliant. So combined rates going down, bonds looking, I mean, don't get me wrong, they've been selling lower, but they're in this channel and they've hit in support. gold selling off, stocks at all-time highs. There's a lot to think about. I certainly wouldn't be diving into buying stocks at the moment. That is something to be thinking about. So that's your update, guys.